President Jerome Powell, do you have plans, or if you're back considering firing Jerome Powell, and what's your justification if you're thinking about this to do this?
Too late. He's always been too late, hence his nickname, Too Late. He should have cut interest rates a long time ago.
You probably aren't thinking about the Fed on a day-to-day basis or anything, but right now we have something very unique going on, where for the first time in modern U.S. history, we have a president of the United States who is looking to potentially fire the chairman of the Federal Reserve. And although that might not sound like a big deal, it's just that it might lead to economic instability, political turmoil, and, maybe like the collapse of the dollar. But also maybe no one really cares. Earlier this year, the credit rating agency Moody's actually downgraded the United States credit rating. And that's something that it hasn't done since 1917. And this is the first time in history that all three credit rating agencies no longer see the U.S. as a perfect borrower. And the reason for this is because, well, the national debt is at 36 trillion. The yearly deficits are continuing to increase and are persistent. And the interest payments on that debt are at the same levels as defense spending at this point. And it's not only about the numbers. Moody's also cited that a lack of political consensus played a big role in them deciding to downgrade the U.S. credit rating. And essentially what this means is that they're not seeing a path to having the U.S. at least decrease its deficits on a yearly basis. And it just doesn't really seem like we're going to make any progress on solving the problems that we have with our national debt. We hear a lot of talk about the Fed, but let's take a second to break down what it is and what their goals actually are. So the Federal Reserve is the central bank of the United States, and their primary goals are, one, to actually keep stable prices. Economists have come up with a target rate of inflation of around 2%. And then also the second big goal is for the Fed to maintain maximum employment within the economy. Now, the third thing that the Fed tries to make sure that they accomplish is the stability of the overall financial system. The Fed has two major tools to accomplish these goals. The first being the overnight lending rate, or what people call interest rates. And so what the Fed will do is if inflation gets too hot, then they will raise interest rates, which will increase the cost of borrowing and basically encourage businesses to slow down and cut back on their spending and investment. On the other hand, the Federal Reserve can lower interest rates, for instance, if unemployment starts getting too high, and then that will encourage these businesses to actually borrow more, spend more, hire, and grow the economy. The second major tool that the Fed has is called balance sheet policy, or quantitative easing, QE, or quantitative tightening, QT. And what this means is that the Fed can essentially print money to buy bonds from the market, and that will actually increase liquidity into the banking system. On the other hand, the Fed can actually sell these bonds or other financial instruments back, and then that will pull money out of the system. So let's zoom out for a second. The Fed controls what is called monetary policy, where they can raise or lower interest rates, or they can buy and sell bonds from the market in order to control the money supply. On the other hand, you have the government, which controls fiscal policy, which is essentially spending and taxes. And so the president and Congress come together to figure out, hey, how are we going to spend the money that we have? And then also, how are we going to collect money in the form of taxes? And together, fiscal policy and monetary policy are supposed to shape and maintain the economy. But they are supposed to work independently. So the government and the Fed essentially have this system of checks and balances with one another. Because the thing is that in the government, we have elected officials. And people that elect officials essentially usually want there to be a strong economy. And what they would like for the government to do is typically to spend money. It's not always like this, but often you see citizens wanting the government to stimulate the economy. And so if they want to do that, that's cool. But when the government stimulates the economy, inflation can come about, right? If you start increasing how much spending is happening, you could have more money in circulation, chasing fewer or the same amount of goods, and prices go up. Whereas the Fed needs to say, hey, like, that's cool and everything, but I'm going to have to raise interest rates in order to make sure that inflation doesn't get too hot. So I'm going to increase how much it costs for people to borrow, which should at least keep some sort of a check on the spending and investment that's happening within the economy. So the best analogy that I could come up with, please forgive me, is like, let's imagine we have a forest fire, but it's controlled, right? So it's cool, it's burning, we need it to burn, but the Fed is going to come in and say, hey, I'm going to put some water on it to make sure that this doesn't get out of control and like burn down the whole Amazon rainforest or something. One of the most spectacular examples of this in US history would have to be Paul Volcker in the 1980s. He was the chairman of the Federal Reserve at the time, and he raised interest rates up to 20% in order to tame inflation. Now, the thing is, he had to do this knowing that it would cause a recession. And a president or politicians aren't necessarily going to willingly cause a recession because they know that that means that people probably won't elect them. So if the president can just fire the chairman of the Fed, or even just pressure them to either raise or lower interest rates, then what kind of a signal does that send to the American people and also to investors from abroad? It basically says that I can't trust this country to consistently separate money from politics. And in that situation, I might need to look for somewhere else to place my money. So let's take a look back into history to see how things like this have played out. In the 1600s, Spain was the richest empire in the world, but they had no separation of powers. So the king had complete control over everything, including the courts. The Dutch, on the other hand, had a different kind of offering, where they had a republic that had a separate court. And with that, it means that if you have a contract within that empire, then at least you know that that's going to be honored, whether you have political connections to the leader of that empire or not. And as a result of this, money poured into the Netherlands. Their stock market exploded, and then they ended up building the largest navy in the world. And all of this was because investors actually trusted the rules of the system. Even the citizens in Spain would be sending their money over to Amsterdam, which was the financial capital of the Netherlands at that time. So right now, the US is practically walking on a tightrope in regards to its relationship with global investors, because we have our national debt at historic highs. On top of that, we have increasing deficits with no change in sight. And then we have our credit rating that just got downgraded and growing pressure on the Fed to make politically convenient decisions. If we lose our independence of the Fed, it could mean that investors around the world will say, hey, this was like the whole reason that I was comfortable investing here. Maybe I should look somewhere else. So it's not just about our internal politics. It also is determining whether or not other countries are going to say, hey, is the United States going to continue to play fair? And so that's why this showdown between President Donald Trump and Federal Reserve Chairman Jerome Powell is a little bit more important than it may seem on the surface. Now, whether or not the markets are going to make a big deal out of this, we're going to have to see. But when it comes to the politics and the overall capital structure of global markets, it's a pretty big deal, and it could change just about everything. Like and subscribe, and click here for the next video.